Hello, welcome to M Plus Online Weekly Highlights. And today, myself, Louis Lau, will bring you through some of the highlights for the day. And today, market is quite inactive after several events over the week. And we have also the GE 15 date being announced last week, and seems like we are having some sort of you know um, very few good factor because after the election date was being announced, it was all the way up above the 1,400 points for FBM KLCI. And right now, it is still inactive around 1,446. Very mixed trading activities. You can see that volume is 1.42 billion, value is below 1 billion. So this is telling us that market is sort of like uncertain. And what are they uncertain of? I think right now there are several events being seen across the world. One thing is that the U.S. and China trade war just escalated 2 weeks ago, and our side technology stocks being hammered down. And after the recent meeting, in China, China has just have some reshuffling in terms of their top management of the country. So right now it seems like a very fearful time for you to be investing in China because of the uncertain in terms of policy changes going forward, and therefore Hang Seng and also China stocks are being beaten down. And with TSMC being under the US and China US chips X. So this will also affect, TSMC from supplying chips to China side. So what does this mean? It means that people are looking at China as a nation of more risk, and people are avoiding them by dumping their shares right now in the market. So perhaps right now, the China is actually capping the upside for Malaysia, because China is always the first trading partner uh, with Malaysia. Well, top trading partners with Malaysia, and given that China is potentially slowing down due to all these factors. So that is capping the upside. Because if you look into US stock market yesterday, it was up, but today KLCI was up a bit, down a bit, and moved in the sideways at the trading break. So it is not so obvious trend right now. It's not so obvious direction right now because of all these events happening out there. But one bright note is that the election is around the corner, which is 1 month from now, 3 weeks from now. And we believe that if there is a very solid outcome out of this situation, then perhaps the KLCI will be able to move even higher from this point, maybe towards 1,005 or 1,006, depending on what is the outcome. So the outcome that we anticipate, if okay, there are several scenarios. One is above um, two-thirds majority, then either party wins with two-third majority will be able to give us a very solid move on the FBM KLCI, and that will actually push the FBM KLCI even higher towards 1,005 or even 1,006. But if it is still back to 50-50, like 52-48% kind of parties, that would dampen the idea of trading in the stock market of Malaysia, and we may go back to 2018 to 2022 kind of trading period. Okay, so that is what we can anticipate. So if Hang Parliament is even worse, because if no coalition is being formed, every party is about 25-30%, then it doesn't make sense so for Malaysia to move forward. So at least as best case scenario, it will be two-thirds majority. But following with that, we hope for two parties coalition, 50-50%, 40%, then it will be back to 2018 kind of trading idea. Okay, so that is the sort of scenario that we are anticipating. Okay, back to what happened today in the stock market. You can see, judging by all these performances, you can see that not many are actually outperforming, only media and transportation and logistics. So these two are the one major contributor towards the stock market today. Telco and media definitely is because 5G is going to roll out, and perhaps 5G rolling out that would also benefit other stocks, similar industry stocks like Opcom, Tita, OCK, Binacom. So those are the counters that should benefit. But the best performer today is actually Opcom, because Opcom has went up 5 cents, 5.5. Highest was around 93 cents, so that would be around 7.5%, 7.5 cents. So roughly that, you can see that this is the one of the best performing sectors. Then the next one would be followed by the transportation and logistics. Perhaps people are looking at transportation and logistics still healthy despite all this scenario, and perhaps even better if there is more transshipment, or there is more manufacturing outputs from Malaysia, then it will benefit our logistic company. So these are the two areas that we foresee that may benefit going forward under these 2 months of very tough environment. Okay, so other than that, what is the laggards? One is the plantation, and the other one is the industrial product and services. Let's see what is inside here. We have some Power Root, Kawan, some consumer related stocks. Sorry, no, this one. Yeah, some of the counters under this segment will be down 0.47. Uh, yep, 0.4%. Yeah, 0.4% down earlier on. Then these are some of the names that is down: PCAM, P Metal, Kobe, SKP Resources. So basically, industrial products are being hammered down, but also there are some positive ones like Hexstar and Imas Pro. These are two agrochemical stocks that has outperformed so far. So perhaps you can actually look into some of these names to trade. Despite the whole industrial product sectors is actually down, you can trade those uptrend in tech counters. Okay, so those are the things that you can actually monitor on. But again, we are looking at also technology stocks being seeing some good rebound formation because US side has been rebounding. But also bear in mind that US stocks has been the tech counters has been quite negative over the past few months, and right now there is some glimpse of light at the end of tunnel. I'm not too sure whether this will contribute to further upside, or it will just hit the S&P 200 and reverse, because as long as the Federal Reserve is still not not ready to pivot from very hawkish to dovish tone, we are still unlikely to see a very strong uptrend move on tech counters, especially right now, even with the US the Semiconductor Act being imposed on those US companies, from refraining them to provide supply chips to China company. That is actually is a new is escalation of the trade tension since Trump era is only on Huawei or several certain companies, but right now it is on a broad base of US companies to avoid them sending chips or supplying chips to the China side, and that would actually impact the overall technology stocks going forward. So it's a lose situation in my view, and I believe that the demand may drop from this point onwards until at least some of the trade tension is being eased going forward. So technology stocks right now is a rebound move, but I don't see that as a strong move yet. So another scenario is that it, given all this, US and China trade war has been escalated, everyone is talking about the trade diversion, which means that people can use Malaysia or Southeast Asia region countries as to send out, their products into other regions, and therefore that could be helping the overall situation in Malaysia. So there are two angles to it. One is that lose situation for everyone, because if China cannot produce its gadgets and US cannot supply them with the chips, both sides would actually have lower demand. But at the same time, if you look into, if they cannot supply to China company, but they can supply to other regions of the company, then other regions may benefit out of this situation whereby China will lose out, but other manufacturers will be, still in play, and they will be able to see further upside from that point. So I see that why we can rebound today, but it is not able to see some rebound in China due to this scenario. Then the second thing is that we might be more positioned towards US going forward, rather than just relying on China's growth. But right now we might be relying more towards the sentiment from the US side. Okay, so that is the idea from this all these events over the week. And also we see that there isn't any change so far in the Federal Reserve's tone, that is still remaining hawkish until year end, until March next year. Then perhaps there is some pivot from hawkish to dovish tone, or hawkish to less hawkish tone. There could be also that kind of scenario. So which means that it may maintain at 4 to 5% interest rate, but it may not come back down to low interest rate environment going forward. So that's the idea here. Okay, so before we go into the stock picks or daily picks for this today, perhaps you all can share and like this video in order to get your stocks being reviewed later at 12:50, and we will talk about your questions or your counters going forward until the end of the session. Okay, so right now make sure you can share the video, like the video, then make sure you get the sharer badge. Then you ask a question. If your question above your comments there is a share badge, then we will review your stocks later. Okay, so let's move into, let me share my screen again. I will share another one, which is the charts. Okay, can you see my screen right now? Hopefully you can see my screen. Okay. So for today itself, we have put in several counters. One is all are related to what we are going to what we have mentioned earlier on. We believe that the rebound of tech will contribute to rebound in our stocks, and therefore we have put in some of the technology stocks counter, like Awantec and also Kobe. So Awantec actually has made a breakout this morning from 50.5 cents towards the highest point was 53.5. So that is about 6 ticks away. And the volume has been translating to a very strong volume as well. So this is certainly a good sign of being able to capture the right counter at the right timing from our discussion from with our analysts in the morning. Every 7:30 we will have this briefing to get the 8 counters for the day. And today itself, we have put in Awantec and Kobe for the technology related, because we feel that there could be some good opportunity within these companies, especially after the rebound in the US side. And therefore, it has actually break out above the 50 cents towards 53.5. And right now it's closing at 50.5 cents, 51 cents level. Although it has given us some reversal sign throughout the day, but at least we are able to capture the morning session of uptrend tone from 49. The lowest point is about 49 cents. Opening price is 49.5, went up to 53.5. So it's that there is about 8 ticks for you all to take profit for Awantec. Okay, so right now, I still see that there is a very good opportunity. If you're holding in the long term, mid to long term, I think this could be related to cloud computing, and also perhaps election team related as well. The target will be around 55.5 towards 58.5. Support, first range of support is about 48. Next range of support is about 46.5. Okay, so this is the some of the technical support and resistance that you can actually monitor. So for Kobe, we did put in this, but it didn't work out. Right now it's hovering around 271,283. It has a gap up move this morning, but it wasn't able to break even higher above the highest point of 284. So unless it can break out above the 284, then next time will be around 3 ringgit towards the 305, 310 zone, and support is about 271. And if it is falling below 271, then perhaps it is a cut loss. Okay, so this is not working in our favor for the time being. So we have Awantec, we have Kobe, but these two companies are not being triggered. What are triggered today is the rest. Okay, like Jinhin, Dayang, Texcam, and Tiguan. Um, why do you put in all this? Because we can see that the Hexstar related stocks are actually moving higher. So that's why chemical stocks could actually form higher, and this is under our one of the stock picks for today. And Dayang is related to oil and gas. Oil prices has been firming quite substantially around 80, 85, and without falling below that level is considered as good. Then Shinhin is related to uptrend counters and also building material. Building material, I see that there are some potential in trading activities. And also Tiguan is plastic related. I think plastic is still in high demand as long as the stable, as long as the more stable the oil price, that the more stable will be the resin prices, and that they can manage the selling price for plastic companies going forward, plastic products going forward. Okay, so the rest like Padini Airport, they didn't really make a, a trigger our signal, but it has actually made a very good progress in terms of share price. So if you look into airport wise, it has been breakout, pullback, and continuation pattern above the 580. I think this is already at a very severe oversold position and may warrant a good decent breakout going forward. So this is the downtrend channel. Okay, downtrend channel. We are going to monitor this as a potential breakout zone going forward. Today is just a start. Perhaps it can move sideways and then break out again. Then we will see further upside from this point. And especially right now, everyone is talking about recovery team. China side could be reopening, opening up their tourists to come out from China. That could help ease the situation on tourism industry, and we should be able to see further upside from this point. Okay, airport and also Padini consumer counters. I think it is resilient, and I see that there is no issue in terms of the share price. It is still on the way up, just that it has been quite volatile in terms of their breakouts. Then it went even below the breakout point here, and it continued to rally again. So to me, this is still an upward trending counter, and we should be able to see further upside at least until this range of 355 level. And Panini is always a very decent dividend payer, dividend paymaster. So perhaps you can actually look at that angle, to buy into those companies with high dividend, solid dividend companies, and perhaps this will be able to lift, even higher towards the 350 or in 365 from this point onwards. So the recent sell down, it is without significant volume. You can see that the volume has been quite steady from this point, 321 level, and went up towards 350. But when it comes down, it is without significant volume. So this is what you can actually monitor to determine your oversold position and rebound play kind of trading strategy. Okay, so we are going to monitor the 350 and also 365 for Padini, and Texcam, it has went even higher, I think. For today, yep, this is today's trading. Let's see. So if you look into Texcam itself, it has been coming off from 380 zone to 2 ring and 70 cents, quite significant pullback. Then it has break out above this 3 ringgit zone, and it has surfaced above that level, and we are looking into a pullback phase, then continuation pattern, at least over the near term. I think it is quite similar to what happened in the past, this part here. So if we use a similar analogy, this is the first wave pullback, and then it rebound, supported around SMA 200, SMA 20, then it could recover back towards that region. So this is also quite similar. After the pullback, it is quite trying to climb above this level here, and hopefully that you can sustain above 3 ringgit zone, and it should be able to move even higher towards 280 going forward. So I can see that this is a very similar pattern, and this pattern might achieve that scenario towards the 380 level in the near term. Okay, in the near to mid term, I would say that within the next 2 months, I think once the result is in, then perhaps we can see further upside. Okay, so TechScam has been all this while banking on the recovery team, as well as the full force in terms of all the business segments. So that's why I think there is some good opportunity out there. Okay, Tiguan is a plastic related company. After the very significant sell down, it is right now coming back above the SMA 220 and trying to break out above the 2 ring and 63 cents level, and that could lift the share price higher towards the 276. So this should be the trading plan for you for Tiguan. If you're trading on this counter, the pullback should not hit 256, or if it is falling below 256, then you have to cut loss. But for now, seems like everything is intact, that the MACD indicator is up, parabolic SAR is still on a green, green dots, and therefore it should continue to trend higher towards 276 level. Okay, Dayang, yeah, oil and gas counter, I think it's quite solid in the current position, current environment. We should be able to see further upside at least towards 120 for Dayang. And I see that the earnings should be quite sustainable, because over the past few times in terms of their earnings reporting season, after the earnings, it gap up, it continued the trend, and most importantly is that their earnings has been growing well. It's not that they have been hitting losses. They are in a positive region in terms of their earnings, and therefore we should be anticipating further upside for Dayang. And especially during this period of time, it is quite downtrend, sideways move, and oil and gas segment is likely to be the dark horse during this period of time, because commodity prices didn't fall that much for this. Okay, so I think next target will be around 129, 130 for mid to long term position. Okay, Chin Hin, last counter before we go into the Q&A section. Right now it's 12:53. We have another 7 more minutes to go. About 10 more minutes, then we'll close the session. Okay, for Chin Hin, I think it's still an uptrend counter. It has been all this while turning up, and it didn't really contribute to a massive sell down yet. Okay, so yet I would say that this is because this is the very strong wave. This could be the third wave, a rebound, and if it is not able to cross above the 297, then perhaps this might be considered as the final wave of the Elliott wave count. Okay, so it depends on how you are going to count on this counter. But right now, seems like if this is the third wave, this is the fifth wave, then if it is forming double top formation, then 297 is considered as the last round for you to sell off the shares. But if you want to hold on and trade your profits, you may want to look into these two range. One is 266, one is 255. These two range will be determining your reversal point, because this has already hit 297. If it is not able, okay, if it's not able to form a good hammer, not able to form a good flag or even consolidation phase, and then it collapsed below this level, this could be considered as a double top formation, and the sell down will very convincing sell down is about 255. If it is, selling down below 255, then we will be convinced to cut loss, okay? Because this is an M-shaped reversal pattern, is considered as double top formation. But if it is able to form a flag formation breakout here at about 266 to 276 zone, then this might continue to even hit higher targets above the 295 towards a higher position, okay? 3 or even 320 or even 350, okay? So this, let's see how does it pan out going forward. But right now, it seems like it's still having some good upside opportunity. Just that this part is a bit worrying, because if it is not able to get through of 297, then we are likely to see some hit some resistance and fall off, okay? If it is falling below 255, that is even worse. That is contributing to a double top formation, neckline sell down. But if it is falling just around the 266 and rebound and forming the flag formation, that could be a flag formation breakout. Then it will be good, okay? So those are the counters that has been put in under our daily picks, because we believe that tech is rebounding. So that therefore we put R1 Tech and Kobe, Padini Airport, Chin Hin Dayang, Texcam, Tiguan is related to their peers that is doing well, and Padini has been all this while consumer and considered as resilient. Okay, so those are the 8 companies for today. If you have other don't have any other ideas to trade, you can also look in the traders list. Our traders list has been performing quite well as well today. DSonic Opcom has been recovering, and it shows some sign that is on a breakout. And this is wait, let me check. So this is the breakout today. It happened at 9:37. Then Samaiden is also up a little bit. Yeah, this morning up a little bit. Then STS also went up. So our stocks has been considered quite well, traded quite well today, despite the sentiment has been quite weak. We are able to capture some of the counters. Okay, so those are the ideas for today, and we will go into the comment section and talk about some of the counters. So make sure that if you have any questions, you just put it into the comment section. Make sure you have a share badge, and we will take it from there. Okay. So there are some questions on Supermax. Okay, for Supermax itself, is really depending on the tech sentiment. If the tech is not doing well, then Glove is doing well. So today, tech is doing well, and therefore Glove is doing not so well. So therefore, this is likely to turn into the fourth wave. You can if you refer to this is first wave, pullback, third wave, pull back into fourth wave, it might continue to move sideways before the fifth wave up. So we have to take note of this, consolidation phase. It's either into a triangle mode or is into a channel mode before the breakout. So if the second wave is short, then the fourth wave should be a complicated wave, and we need to wait for some time before a real breakout move will come. So that's when I think we just need to wait for that to happen. But so far, I don't see it happening yet, because as long as tech is still continuing this upward trend, Glove might not, hit that level. But if you still want to trade on Gloves, your cut loss is around 82 cents. Your resistance is about 92 cents. So this will be the range. Right now it's quite hitting the range around here. 80 last price was 85, and right now the support is 82. So 3 cents risk, whether you want to risk that or not. If yes, then you should be trading. But I would say that there is still more consolidation going forward, and we shall wait. Okay, we shall wait. Even at the 30-minute chart, I think it's still not ready yet, not ripe to trade. I think it might, continue to trade around 82 cents before the real spike come in. Okay, so try monitoring going forward. But right now, it seems like not the right timing. It seems like we have another Glove counters, Kosan. We'll talk about this before we go into other counters. Okay, Kosan wise, it is positive, but it is not very a significant one, because I think it is still it is okay to gather around 109, accumulate around 109, then trade around the 119 level. I think these two levels are very significant, because a very significant massive volume was seen. These two bars, the sell down from 118 towards the lowest point was around 97 cents. So right now it has overcome the 97 cents. So therefore we shouldn't be too worried. As right now it has um, more sort of positive bias, but positive buyer trading activities, but you have to take note of 118, 119 zone. So if you're trading at this 109, your next target is just about 119. Then we will need to monitor whether does it break out above 119. So far, it has been quite consistently hovering above the SMA 200, SMA 20. So you can use that as a guide to cut loss. 109 is a cut loss point, and 119 is the resistance. Okay. So next we have Theta. So we got another few more questions. Theta is related to 5G or telco side. They have been coming, they have been trading very strongly since the 80, 60 over cents, 70 over cents towards 1 ringgit. It has pulled back towards this breakout point. So if you're trading on this counter, I think it's just a technical rebound play, perhaps towards the 77 cents or even the 79 cents zone. That will be the range that we are looking at only. Right now it's still not the right timing to position for a strong upward trend, but at least there are some rebound play from 72.5 to a 77. Cut loss is about 68.5. BJ Food, last week I think is quite a massive sell down, massive high volume. This is quite unusual. It's very unusual, and because that if after this kind of volume, normally we will be seeing further sell down phase towards this 88 cents level. So we have to really monitor whether does it come back towards 88 cents. If not, what should we be monitoring is, if today's bar closed like this, you need to monitor the 97.5. Once it is able to cross above 97.5, then really we are going to monitor for further upside potential. That may cross above the 101 level. Okay, so this is very crucial, because normally after this kind of inverted hammer, it should continue to fall, and it shouldn't come back to retest the new high. But in this scenario, if you want to monitor for a new high, which yes, we can do that, because technical indicators are still very positive, and we can actually monitor for the breakout to happen above 97.5. Then perhaps next target will be around 108 or even 112 level for BJ Food. I'm still looking at a very positive earnings growth. It will not be as strong as second quarter, but at least will be decent quarterly results, at least in the month of November. Okay, so last counter for today will be RHB Bank. Okay, RHB Bank has been coming back. I think last week itself, Hafin has given out a very special dividend, and therefore that has contributed to all the banks being rebounded strongly. So what I see here is that if you look into this range of 553 level, uh, this is the breakout happening after the channel formation. And after the channel formation, it has not been seen as a very strong, convincing breakout yet. So we are looking into potential, just a potential rebound move. But if it is able to pull back towards this range of 540 towards 553, I think it's worth to take note that you can actually accumulate along this level, 544 to 553. That will be an accumulation zone. And another target will be around the 5 ringgit and 50, 5 ringgit and 68 towards 5 ringgit and 73 cents. So if it is able to pull back towards 553 cents, 5 ringgit and 53 cents zone, then you can actually accumulate for either dividend or the potential upward trend formation going forward. Okay, so I see that banks will be able to support due to the stronger GDP numbers that we can expect in the month of November, and earnings on banks will still be consistently doing well, although the growth will not be as good as 2021. or even during MCO period. But at least for now, we are not seeing slow down growth in terms of banks yet. Okay, so that will be it for today. Thank you for tuning in into our webinar, weekly highlights webinar today. So I hope that you all are able to grasp the idea of the overall event, external factors, external risks that we are facing right now, the US, China, and also potentially the domestic fear will be if the election has no outcome, has no significant outcome, then it will be more fearful for the policy changes going forward, and that may affect the sentiment on the local front. So that is one of the risks that we can actually foresee. But if the outcome is two-thirds majority, then yes, all the previous negative sentiment will turn positive because policy changes will be easier, and we should be able to see further upside from that point onwards. Okay, so stay tuned. Next week we will give some updates on what are we seeing, what are we looking at going forward. Okay, so thank you so much for the time, and see you again next week. Bye bye.